All right, today is all about the VA loan. We're talking with Milynda Hallerman, so let's go.
If this is your first time to our channel, be sure to hit the like button and subscribe. My name's Tara, this is Jeff, and along with David Schellenberger, we make up the Schellenberger team. So we can help you with any of your real estate needs, so be sure to reach out. Our contact information is in the description box below. And remember, we've helped people just like you find the right home at the right time, right here. We are visiting this morning with Milynda Hallerman with SWBC Mortgage. We've talked with her once before, and I'm so excited to visit with you again today, Milynda. So today we're talking about VA loans for veterans. And it is another package that I was completely unaware of until actually I worked with Milynda with my brother, and he used a VA loan to get his first home. So I was like, let's talk about VA loans. So anyway, good to have you.
I am thrilled to be here, and that is my favorite topic, is VA loans, and what a great benefit it is that you got for your military service. I think that education about that is great, educating both our veteran buyers and sellers about why it is a great loan product and something that everybody needs to understand a little bit more about how it works.
Great. So yeah, just start from the top. Is sort of what is a VA loan and how is it different from conventional and SBA?
VA is its own loan product. It is a government-backed loan, but it is different from USDA and FHA, the other government-backed loan products, and it is administered by the Veterans Affairs Department. It started in 1944, kind of as a response for all the heroes coming back from World War II, and a grateful nation wanted to say thank you to all of our heroes, and that was the idea, was to, as veterans are transitioning out of the military, to help them buy a home, safe, sound home to start civilian life. And since then, it has even grown and turned into a program. Active duty military members can use it, veterans use it, and it's more than just a loan. It's not a one and done type thing. There's some misconceptions that we can talk about. It's a lot more flexible maybe than people originally thought it was. The big thing about VA is zero down. I think that's what most people know about it, is you can buy your home with zero down payment. And that is absolutely correct. There are times when it may make sense for the veteran to put a small down payment to save a little bit of money on some fees. But another great thing about the loan that is not represented enough is not only is it zero down payment, but it is no mortgage insurance. And that is a huge savings for veterans.
So that would commonly, people would see that as PMI. That's what that acronym is. So it's private mortgage insurance.
Yes, so private mortgage insurance or mortgage insurance on a government loan. And that is something that just about everybody pays on any loan type anytime you put less than 20% down on a mortgage. And that is an insurance policy that the borrower buys for the lender to make sure to give that lender some extra assurance that even though that's a very small down payment you're putting, because nowadays you can put as little as 3 or 3.5% down and still buy a home. So that mortgage insurance is an extra level of guarantee and reassurance for the lender that if the buyer defaults on the payments, that mortgage insurance policy will step in and help make the lender whole. So that's what mortgage insurance is for. Well, what the VA did...
And you said, you used the term, you said make the lender whole, meaning that it makes sure the lender gets their money out of it.
Yes.
They put into it.
Yeah.
That's making it whole.
It helps them, it helps the lender recoup the losses from the loan defaulting.
Okay.
So what VA did is it said, not only are we going to make this a zero down payment loan for you veterans, but we, as the VA, are going to guarantee your loan. So veterans don't have to pay mortgage insurance. That's not even a factor in the monthly payment. It's not something that the lender has to calculate because it doesn't exist for VA loans. And that's the only loan type that you can put nothing down and not have to pay mortgage insurance. And it's a huge monthly savings for families.
Okay. So, and I have a question. I'm wondering if this is tied only to VA loans or if it would be ubiquitous with any type of loan vehicle. The idea of a veteran having disability and that affecting how much of their taxes they paid or didn't pay. Is that correct?
Yes. Okay. So sometimes when veterans get out of the service, they get what's called a service-connected disability rating. And basically that is the government trying to compensate for wear and tear on the veteran's body.
Okay.
Right. And that can range anywhere from, let's say, 10% all the way up to 100%, depending on what they did and what type of wear and tear we're talking about.
Okay.
Physical, mental, lots of different things can happen. In the state of Texas particularly, we love our veterans in Texas. So we have a tendency to be extra compensatory, and property taxes, for instance, even starting with as little as 10% of a disability rating, you're going to get a small exemption on your property taxes as a disabled veteran. That scale goes all the way up to 100, and if you are a 100% rated veteran in Texas, you're exempt from property taxes.
Okay. So I guess a question I have is that tied at all to getting a VA loan for your home, or would it be no matter what kind of loan you got, you still could use that exemption?
Even if you get a different loan type,
Okay.
you can use your rating for the property taxes. The property tax exemption is not connected to the loan type.
Okay, that was my
Yeah.
question. Okay,
Yes.
great.
And I want to point out that just because we're using the word disability, that does not, I don't want don't attach anything to that, okay? Because these are men and women who are coming back out into civilian life and holding jobs and doing great,
Yeah.
okay? So we use that term because that's the term the VA uses, but that doesn't mean that there is
They're broken or something's wrong.
Right.
Yeah.
Exactly. That's not necessarily something you're going to see, but it is the government trying to compensate for literally wear and tear
Yeah.
on their body and mind.
Yeah.
Okay, during their time in the service.
As they should.
Yes, as they should. And so there's another thing that goes along with that disability rating, and that is a monthly payment. All right. So depending on the amount of the rating and the size of the veteran's family and where they live in the country, there is going to be a monthly payment that comes to them because of the wear and tear.
Of that rating.
So, and that's tax-free income. So a lender can use that money to help qualify for the home.
Oh, okay.
So let's say that the veteran has come back out into civilian life and they're working and they've got their new job, but they also have a disability rating. Well, then we've got two incomes that we're going to be able to look at. And that disability income, we can gross that up 25% because it's tax-free.
What does that mean, gross that up 25%? What does that mean?
So if we said, for instance, if they were 100% disabled and they were getting $4,000 a month, just to use round numbers, we could count that as $5,000 of income because they're not paying tax on it.
Oh, okay.
Yeah, so
Okay.
it can make a real difference. As we get up into the higher ratings, makes a real difference. And at 100%, that's thousands of dollars a month that they're getting, plus they're not paying property taxes, and that's several $100s a month. Every month that the veteran and their family are going to save on property taxes that they're exempt from.
Okay, so for me to just summarize real quick to make sure I understand, the VA loan from the veteran or the active duty, from their perspective, they're thinking about zero down, no mortgage insurance, no,
Right.
called PMI. And then if they have a disability, that money they receive for that rating can be calculated as part of their income.
Yes. So
Those are three main points about the VA loan.
exactly. And
Okay.
and that service-connected rating, that income actually works double for them because it's also going to give them an exemption on their property taxes.
Great. So I guess one more angle or one more thing that the buyer would really consider is what types of properties they could buy. Okay, so talk a little bit about that.
That's a great thing to talk about. All right. So normally when we start talking about home buying, we instantly revert to single-family home.
Yes, we do.
And that's the standard, that's the classic. Absolutely, you can do that with a VA loan. But you have a lot of other options with VA as well. You can do a duplex, you can do up to a fourplex with your VA.
Oh, wow.
As long as you are going to be living in one of the units, you can do duplex, triplex, fourplex.
That's fantastic.
And then you've got additional rental income
Right.
coming in. So that opens up a whole new chapter, and that's something that we can talk about veterans using their VA loan to grow wealth for their family. So you can buy up to a fourplex as long as you're living in one. A VA loan always has to be for your primary residence. That's important to remember. But veterans live in a lot of different places, so maybe it's a condo. You can buy a condo with a VA loan. And you can buy a manufactured home with a VA loan.
What about just land
The VA loan is designed for a home.
for housing? For
Yes.
such a house. Okay.
Yes.
So they can't be like, oh, we'll buy this 100 acres or whatever because we're going to build on it
Right.
later.
That would be with a different loan, and depending on the amount of land that you want to buy, that's a conversation we can have about Texas Veterans Land Board loan.
Oh, that's right.
Yeah.
Okay, that's a different.
Because being Texas has its own options for veterans, and Texas has a great land loan for veterans.
Could someone be using a VA loan actively and also do the Texas Land Board loan that I said?
absolutely.
Okay, so you could use both at the same time if you wanted to.
Yes,
Okay.
you could.
Good to know.
And so sometimes if the veteran wanted to buy land and then build a home later, maybe they get that land with the landlord loan, and what the VA loan would be is the permanent financing at the end of the process.
Okay.
So there's generally a construction loan
Right.
in between all of that because contractors have to get paid and things like that. And then the VA loan is the permanent mortgage financing at the end of the process. So it's such a versatile product. Condos, manufactured. You could do a log cabin. You can do a barn dominium.
Oh, barndominiums, yeah. I guess it's like a house, yeah.
I've done barn dominiums, absolutely.
Are there types of structures or homes that don't qualify?
Commercial properties.
Okay.
So it's not going to be a commercial property. A mixed use space where a large part of it is obviously not residential is not going to work.
So for an example that I'm just bringing this up because I actually saw something like this in the MLS recently, was a barndominium where a majority, all of the bottom, which was huge, was commercially used. And then there was like 800 square feet above, like a loft that was living space.
That would be tough.
Okay.
Okay. Now, if we were talking about something, say a home where one room had been partitioned off as a hairdresser salon or as an accountant's office, that's a different thing. The VA loan is all about flexibility, and it really is custom tailored to the veteran and their story. The VA loan always involves a story, but generally speaking, it is for residential properties for primary residence for that veteran and their family. I would strongly encourage somebody who a good portion of their business, over 80% of lenders only do 1 to 3 VA loans a year.
Wow.
Okay, so there are very few lenders who do as many VA loans as I do.
So they just may not be as knowledgeable about ins and outs. And
Because circumstances come up. Real estate is the most unique, individualized financial transaction there is, right? So, and every veteran is different and every home is different. Each transaction is unique. You have to look at it as its own separate thing. And VA has a lot of flexibility in its programs because it wants to accommodate the veteran as much as it can. So it is important that you understand the nuance of the VA loan program. It's important, particularly when it comes to the appraisal process, that you understand that whole process so that you can help your client and your agents. Because what you want is you want a VA lender who can guide everyone in the transaction, who's the expert, who's done more. That veteran, that may be the first home they've ever bought.
right.
And even if it's
Overwhelming
right,
by itself.
even if they bought 1 or 2 homes before, they're never going to have as many transactions. And realtors do a lot of different types of transactions. So unless you're specializing in veteran clients, you're not going to see as many as hopefully that lender. So you want to be able to lean on the lender for expertise.
Okay. Changing gears just a little bit. What about the VA loan does a seller need to be aware of? Like, we're signing a contract with a seller, they list the different loan options and we ask them, which ones would you like to consider accepting? So what would they need to know about a VA loan?
This is a great question, and I'm really, really happy to answer this. The main thing that we want to get across to sellers is there have been a lot of misconceptions about the VA loan that are just not true. And there are some things that were true 30 or 40 years ago that are not true now because of technology. Number one, VA loans do not take longer to close. Okay. Number two, just because that may be a zero down loan does not mean that is a low quality loan. That does not mean that is a low quality, financially speaking, borrower.
So from the seller's perspective, that doesn't imply this deal has a higher risk of falling through.
Exactly.
Okay.
That ability to put zero down is a right that veteran earned through their service to our country. All right. It does not mean that they don't have the money. It means that they have earned the right to not have to spend the money.
Okay.
So don't look at it as a lower quality loan. I will say that VA loans are higher rated for investment purposes than conventional loans and have a lower default rate than conventional loans.
Wow.
VA loans are the highest standard of loan when investors are buying loans.
Really?
Yes.
Wow.
Lowest default rating, super high quality borrowers with credit scores, financial reserves, etc.
Okay.
All right.
That's good to know.
Veterans are 5 to 7% of our population, but they're 14% of our home buyers. So this is a home buying population, and you do not want to turn away that potential buyer because you heard something about it's a no down loan and it may not turn out and the sale may fall through. That is absolutely not true.
Right.
All right.
Now, there is one little thing that the sellers have to pay for that they normally aren't required to pay for, but it is so tiny. That wood destroying insect.
Actually, they don't have to.
They don't?
They don't have to anymore.
What? changed?
That changed a few years ago. See, this is the...
But I just looked it up on their website a couple of weeks ago and it said that.
No, they don't have to pay it.
So they don't have to pay any of the closing costs.
Yeah.
Like they're not required.
They're not required to.
Okay. I did not.
Now, I will say that the VA loan is the most lenient in what the seller can pay to help that veteran get into the home. But no, sellers do not have to pay for the termite or wood-destroying insect.
So there's no extra risk to the seller.
There is no extra risk.
It's to not tick that box saying we'll take a VA.
And that is a way, if you are a patriotic person, if you want to say thank you to veterans and you love to say thank you for your service, this is an option to put your money where your mouth is and make a difference, a concrete difference to a veteran and their family.
All right. Thank you. I'm so excited to hear that I can now tell sellers there's no extra cost to you. And the risk is actually lower statistically with this number you just gave about the 14% and 5 to 0%. Yeah. So anyway, that's exciting. One more area I wanted to cover was, and you taught me all about this, the whole idea of being able to use that VA loan to generate generational wealth. So can you walk through that for us?
This is kind of I think it's probably an unintended benefit, but it's a benefit that veterans have because the VA loan is not a loan. It is not a one and done loan. It is an amount of entitlement that the veteran gets from the VA. And that entitlement is the VA's guarantee of the loan. Like we talked about, the veteran is not paying mortgage insurance because the VA is covering that for them with their guarantee. Well, the VA covers that up to $1 amount, and it's a large amount. So the veteran may not use all of their entitlement on one home loan, so they have some left over. So if you know about how VA entitlement works, if you're a veteran and you'd like to plan a little bit and you're interested in real estate, you can strategically make purchases and have some rental properties by the time you're done with it. So, and this is all totally above board. VA understands that veterans are doing this, and as long as veterans do it within the parameters, they're fine with.
Okay.
And the first thing is a VA loan is only for a primary residence. So any property that you purchase as a veteran, you need to live in that property. Do not try to short that cut. That does not work. This is a great program following all the rules. So the first thing we want to do is make sure that you understand you have to live in that property as your primary residence. How long do you have to live in that property? You will hear people say, oh, you have to live in it a year. You have to live in it 2 years. What I say is it has to make sense to the VA. All right, so let's say that you buy a duplex. Let's say that you're a young veteran, you get out of the military, you've got your civilian job, maybe you have a disability rating and you have some disability income too. So you have enough income to qualify for a small duplex and you are living in one side and you are renting out the other side. Well, and let's say you're single, and this is just one scenario. There can be a lot of different scenarios. Living in one, renting the other one, living your life. And let's say a year down the road, maybe it's a year, maybe it's 2, whatever. You meet someone, right? You fall in love, you want to get married, that your new partner does not want to live in the duplex.
Yeah.
Okay, would like a bigger home. So you decide it's time to buy a bigger home. So you've had a life event, you've had a life change. And the VA is going to understand that your life has changed and you need different housing now. And so they're going to understand that you're ready to move. And that does not mean you have to move away to a different city. You could move not even that far away, but just to a bigger property. And you could keep your duplex. Odds are you're going to have enough entitlement left to buy another home, again, with 0 down payment. Depending on how big the home is. If it's a much bigger home, you may have a small down payment. Usually we can get 2 properties purchased in Texas without having to put a down payment down. Then you are living in your home and you still have your 2 duplex units that you're getting passive income off of every month.
So let's talk about that entitlement a little bit. Is it a set amount of money that's the same for each veteran, or is it different based on the individual circumstances, like how long they served, or?
It's the same. And if you haven't used any of your entitlement, basically by VA standards, you have unlimited entitlement, meaning that you have whatever you financially qualify for. So however much your income is, whatever loan amount you qualify for with your income, VA will guarantee that. Most mortgage companies will go up to $1 million with no down payment.
Okay.
SWBC, my company, will go up to $2 million with no down payment.
Get a really great house where we live. I guess there are parts of the country, $2 million is, you know, just your average out or whatever. Yeah.
But yes, I mean, in Texas, that's a lovely home for $2 million.
It all doesn't matter where you are. Like you can spend $2 million in College Station, Texas.
Yes.
Versus $2 million, Los Angeles or wherever.
And there are some high-cost parts of the country, like in California, in Washington, D.C., in Hawaii. So we're not talking about those, but most of the country at these standard loan limits are going to apply.
Okay.
And if you qualify to carry a note of that size, then absolutely you can get a $2 million loan with zero down payment. Now, let's say you've used part of your entitlement, so you don't have your whole entitlement.
How much is the entitlement?
It's either unlimited if you haven't used any of it.
Okay.
Okay. But if you have used some of it, any amount, then it's tied back to conventional loan limits. Okay. And conventional loan limits change, basically go up. They go up every year.
Right.
And right now in 2025, conventional loan limit is $806,500. Okay. So at that point, your entitlement amount is going to be tied to that conventional amount. And that's when we get into eventually, if you're buying multiple properties over time and living in each one of them first as a primary residence, eventually you will get to the point where you have to have a down payment to use that last portion of your entitlement, most likely.
So let's say you bought a house for around $400, then the second one's around $500. You would be able to get both of those with zero down?
Totally eyeballing that. That's about $900,000 worth of house, so maybe not.
Okay.
Okay.
So maybe.
These are exact calculations that your lender needs to do. We do not need to get into the weeds about doing these because it's a little more complicated than that.
I'm trying to wrap my head around, you know, from someone's perspective, walking that is familiar with our area, kind of like, oh, okay, you know, I can get this and then, okay. So that's how they could have that rental property after they've moved and bought their second property.
And this is going to be an individualized plan.
Right.
You know, after they bought that first property, you're going to discuss with your lender, and the lender's going to say, okay, this is our max loan amount for the next property. So if you go over this amount, there's going to be a small down payment.
Right.
So you know when you're shopping.
Which, I mean, that's huge to know for here because of Texas A&M and all the rentals and students. I mean, you could really strategize well.
Yes.
Which I felt like my brother did, you know, was where he bought. So that's very exciting.
Exactly.
Yep. Great. Thank you.
Hey, if you're enjoying our videos, we would love for you to like the video, make a comment, let us know your thoughts, and subscribe. And also share. We'd love for you to share it with your friends.
Okay, Jeff, I love talking to Milynda today. I knew a bit about VA loans, but she really clarified some points for me. So I enjoyed doing that. Yeah,
it went really quickly because she gave us a lot of information, but I could have sat here longer to hear more. So, and really, it's a great way, as Milynda said, to give back to our veterans, to appreciate our veterans. And she brought up a great point about sellers. There are no barriers to a VA loan.
Right, no risk, no extra risk to a seller at all.
So
hopefully if any vets watch this and they weren't aware of, they might have known, I would imagine, Milynda, that like probably a lot of people kind of know about it, but don't really know the ins and outs. So hopefully this clarified a lot for veterans as well.
So reach out to us with any questions. And remember, we've helped people just like you find the right place at the right time.
Right here.